Hey everybody, Smart Silver Stacker here. Hope you're doing well. And I had to do a live stream to talk about this spike down in the price of silver that we are witnessing today because I was afraid if I recorded a video and tried to edit it and put it up later, the dip would probably be over because that has been the trend in this bull market. If you're thinking about buying this dip, and silver is right now down about 2.13%. Make sure you check out sdbullion.com. They have junk silver half dollars right now at spot price. I actually picked some of these up this morning before the dip. Whoops. But, at the end of the day, I really don't think I'm going to care whether I paid, a $33 face or $34 face, or if I bought at 46 or 47 at the end of the day, because silver is heading much higher. And I know a lot of you have probably been waiting for a dip like this. Of course, none of this is financial advice, but this is probably about as good a deal on silver as you are going to get. Just my take. I mean, of course, it could fall further, but it's already bouncing pretty hard off that $46 level. Earlier, a few minutes ago, silver traded as low as $45.89. Now that's pretty interesting because overnight the silver spot price actually rose above $48. So we're going to look at some charts and we'll talk about this dip and some of the broader picture here and why, again, this is likely to be a very short-lived dip, if you ask me. We are seeing, though, an impact here across markets. The miners taking a bigger hit even than the metals themselves. We got the SILJ Junior Silver Miner ETF down about 4.3%. The GDX is down 3.2%. And if you've been following me on X, and if you don't, I would say, go ahead over to x.com/stacksmarter and give me a follow. You can also message me on there, and I communicate with everybody pretty much who messages me. But if you've been following me over there, I've been getting kind of antsy with this run up that we have seen in silver. This is a post from the 30th where we had that initial dip that you see on the chart, let's see, right here. And I was getting a little nervous about that. I said that we might see a renewed downtrend here, a bit of a correction, because we had high volume on that spike down, had a bearish MACD cross. The RSI shows that the silver market was overbought. But then, that's not what we got. We got the silver market rallying. It took out new highs above $47. So what I said in response to that was, it appears that pullbacks will be few and short-lived. And I continue to hold to that view. I mean, the uptrend in silver is still completely intact. And the dips, in my mind, again, not financial advice, those are buying opportunities. But, again, you should follow me on X. I did put this post a few minutes before the decline that silver was running up against some support here, and it was testing support. I said, are we about to get a discount on some bullion? And apparently that is exactly what we got. And the reason I say, follow me on X is because I can't always just hop on a live stream when there's major market events, but I can almost always shoot out a tweet. So if you want live, up-to-date, silver market commentary and forecasts and analysis, then check me out on X. I didn't see any immediate news that suggested that the silver market should sell off. This seems to be an event driven by technicals. You can put a comment in the chat if you are aware of a news item that triggered this sell-off. But to me, it's just, nothing goes up in a straight line. If you look at the daily chart, this is a 4-hour we've been looking at, the ascent of silver. I mean, it's like taking out new highs almost every day, right? Nothing goes up in a straight line forever. The RSI had gotten up above 80, which indicates heavily overbought. Now, it is true that in a bull market, the RSI can remain overbought, significantly overbought, for a very long time. It doesn't indicate that a crash is inevitable. But we're looking at silver right now approaching the $50 price target, right? The nominal all-time high for the price of silver. Before we can blow through that, and I suspect that we are going to do that, it didn't happen in September like I had originally said. At the beginning of September, I thought might happen. But we got darn close. I mean, we got up to 47 and change in September. And now I'm suspecting that, by year end, we're going to have $50 plus silver. But we might see a battle at that price level. And to me, any breakout above $50 will be much more sustainable if we can trend sideways for a little bit, do the consolidation, allow the 200-day moving average to catch up to the price of silver a bit, allow the RSI to cool off, and then we'll be ready to really blow through that $50 resistance. And once that happens, it's off to the races. That'll be uncharted territory for silver. And silver does have much higher to go. That $50 level, that is a nominal all-time high that dates all the way back to 1980. But if you adjust that for inflation, you get $200 plus silver in today's dollars, and that's using the CPI, which understates the true level of inflation. You've also got the gold to silver ratio today up once again to almost 83, very high. This suggests that the bull run in silver and gold still has a long way to go. In previous bull markets, what we've seen is a collapse of the gold to silver ratio towards the peak. In 2011, it got down into the low 30s. Right now, it's at 83. So all signs point to a renewed move in silver. So that is why I view this dip as a great opportunity to get your hands on some physical metal. And, maybe I'll pick up a little more. I picked some up, as I mentioned this morning, right before the dip. Whoops, that's always a good indicator that the silver market is getting overextended, is when you go in and buy some, right? I know that's a common joke among stackers. But again, I'm not going to care once I have that silver if I paid $46, $47, if silver is in the triple digits, right? I don't think it's going to make much difference to me at that point. I suspect that we're approaching, at some point here moving forward, some kind of a flashbulb event in this economy, a financial crisis of some sort. I don't know exactly what form it will take. If it's a black swan, it means that it's almost unpredictable in its nature, but we are ripe for a crisis here. We've got $37.5 trillion in debt. We've got this government shutdown going on right now. So over at Polymarket, they've got the highest odds is that the government shutdown is going to last until October 15th or later. So typically what we've witnessed is this brinkmanship and this run up to a government shutdown. And ultimately, both sides will kind of come to some kind of agreement at the last minute and decide to print up a bunch of money and spend some money. But this time, it does appear that both parties are sort of at a loggerheads. We may get some of these federal employees fired. I mean, you can read the news about that. But from a stacking perspective and from a silver perspective, the reason this is important is because we've got the stage being set here for a lot of money printing. Recently, Treasury Secretary Debasement said that the government shutdown could have a negative effect on U.S. GDP. What does that mean? Well, we go into a recession, you know what they're going to do, right? They're going to print a ton of money. And what it looks like to me is that scapegoats are being set up for this looming recession, right? They're going to say that the Fed did not cut quickly enough, did not cut fast enough. That's why the president has been attacking Jerome Powell and pressuring them for easy money so that once the recession rolls around, they can point the finger at them and say it was their fault. Now they're going to be able to say, oh, it was the Democrats' fault, right? Because we couldn't come to an agreement to keep the government from avoiding shutdown. That's part of what hit GDP. So what do? Well, we got to print more money, right? And this is not just my opinion. If you look at the CME FedWatch tool, following the government shutdown, the odds of further rate cuts down the road have risen significantly. Right now, for the October FOMC meeting, you can see that markets are pricing in a near certainty of a cut, taking us to 375 to 400 basis points on the federal funds rate. And then if you go out to December, there's, again, almost a unanimous consent, 88.7%, that we will get 2 cuts by the December meeting. So that would be a full 3 cuts by December. And if we do see an impact on GDP, if we do see an impact on employment numbers between now and then, these numbers are almost certainly going to go up. If there's a crisis, well, that means that you could see way more cutting. Maybe you see a return to QE. I think that is ultimately what we are going to face. And the narrative here isn't going to be that important. The reality is that the reason they're going to have to ease is because of this enormous debt burden, right? And it's continuing to expand. The deficits are continuing. Unfortunately, when they, quote unquote, shut down the government, doesn't mean they stop spending trillions of dollars, right? It means that some, poor low-level government employee just doesn't get paid or gets furloughed or something like that. And, I'm not a big fan of having huge numbers of government employees. I think it's a net drain on the economy. But the point is that, Raytheon's going to keep getting contracts to build smart weapons. Boeing's still going to get their money. It's not them who's going to pay it. It's going to be, people who have come to depend on the government that are going to take the worst of it. And the debt and deficit's going to continue to grow. But ultimately, don't worry. I mean, this will all ultimately be funded. It's just going to be funded in devalued currency that won't buy anything. And that's why, when I look at this silver dip, I just view it as a buying opportunity. Also, let's talk about what silver just did, because silver just did something very important. This is a chart we've been looking at for a while here, this cup and handle formation. Let's get rid of these indicators here. This cup and handle formation on the quarterly chart that goes all the way back to the 1980 high. Well, silver on October 1st or the end of September here put in the highest quarterly close on record. So it appears to have broken out from this massive cup and handle formation. This is another reason that I think any dips here should be viewed as opportunities to get your hands on some real money. Now, how severe of a correction could we see from a technical standpoint? Well, it's possible maybe we retest this neckline right here around $39. I mean, if we get some bad news, if there's a big a coordinated effort by the shorts to take down the silver price, maybe we fall all the way to $40, $49, $39. I personally would not complain about the opportunity to pick some silver up at $40. Put it in the chat. If silver falls to $40, are you going to bemoan that, or are you going to be happy about it? Because personally, as a stacker, I mean, dips here are nice. I'm not thrilled about having to buy silver at $47 an ounce, even though I know that in the long run, it's going to be heading much higher. The only thing I can say is that, back here, in the lows, I wish I was buying more. I started this channel in 2017 here when silver was around 16, 17 bucks. I was buying a lot of silver back then, but all I can say is I wish I bought more, right? But that is not that important. The thing to focus on is what's coming next and where we are headed next. And when you look at this chart and you think about the fact that the inflation adjusted high for silver is in the triple digits, and likely, the high triple digits, if you're really talking about how much inflation there has actually been since 1980, not what the government tells you with the CPI, which understates it. This is setting us up for a rocket ship price, right? And $50 is going to be that key level. When we break through $50, the nominal all-time high, investors are going to wake up. How many of you out there, I'd be interested, if you're watching this later, leave a comment down below. If you're watching a live stream, put it in the chat right now. How many of you ever hear about gold and silver except when you're watching channels like this or people in the stacking niche, right? Yeah, I see some people in the chat, they're saying that they would be happy at 40 bucks. But this is not getting reported really in the mainstream media, in the mainstream financial media. What are they talking about? They're still talking about tech stocks because they're talking about crypto. They're not talking about gold, let alone silver. I mean, silver is probably still one of the most unloved sectors in the markets. The silver story is something that is not in the zeitgeist of the public. They don't understand that there's a contracting amount of physical silver, that for years now, we've been in a physical market deficit. They don't understand that silver is still, even after going up, 29% in the last quarter, it's still cheaper than it was in 1980. Very few people are aware of this. And at some point, that is going to shift, right? And that is when you are going to see the silver price really move. And that's where you're going to begin to see it in the physical market. Because look at this right now. The silver price is up again last quarter 29%, year to date up even more than that, and yet you can get physical silver at spot price. And this is not just SD bullion, this is across the board in the physical market. Premiums are very low right now. If you go to sell your physical silver right now, you're going to be getting less than spot very likely, because That's what a lot of people are doing. People have grandma's coins that they inherited and they've just been sitting in a dusty shoebox, and now they see, oh, the price of silver has, doubled. I'll go sell it. But nobody is loading up on physical silver right now. Well, I am, and I'm sure some of you watching are, but on net, the public at large is not loading up on physical bullion yet. But I think when we cross $50 and when inflation begins to really reassert itself and it becomes clear that the Fed's priority is not fighting inflation. They had us going for a while there with the quantitative tightening and the rate hikes and, a lot of speeches where they said that inflation was important to them, but clearly they've begun cutting at a time when the M2 money supply is at record highs, when the stock market is at record highs, when gold is at record highs, when silver is approaching record highs, and here the Fed decides to begin cutting. Inflation's not their concern, right? They are concerned about the wheels falling off of this whole system and a systemic financial crisis which could bring the economy to its knees. Now, I mentioned earlier that there was a crisis looming. This is something that's kind of been going through my head lately, and maybe you can bookmark this video and come back and watch it in the coming years, months perhaps. I believe that there is going to be a flashbulb moment, one of these moments like, major crises, major events that have happened throughout the past decades and centuries, where people, they witness this event, they see it, they remember exactly where they were when they received news of that event happening. And I think that we're going to have an event like that in the financial space where there will be a day or a very short period of time where everything kind of gets flipped on its head, right? Where everybody's right now views treasuries as the big safe haven, and the U.S. the dollar is the reserve currency, and all of that could flip on its head with a few short series of events. And again, I don't know what that's going to look like exactly, but I do know that when that moment comes, having physical metal is going to be a very reassuring factor for the stackers who are holding it. And it also will be a time when those without physical precious metals, and that's the vast majority of the population, suddenly desperately want to get their hands on some. You might remember back in March 2023 when we saw the banks begin to fail, when we saw, the Silicon Valley Bank and that series of bank failures, that kind of cascading series, that was all due to the value of treasuries on the balance sheet of these banks. Well, what happens if everybody starts to dump their U.S. treasuries? I mean, that would trigger a cascading financial crisis, right? Who would have to come in and buy it? The Federal Reserve. That's the only buyer left. The foreign countries that have been buying U.S. treasuries for decades are no longer interested, right? China got $1 trillion worth of U.S. treasuries. You think they're going to keep loading up on those? A lot has happened over the past several years, which has set the stage for a dethroning of the dollar from its role as the preeminent world reserve currency. Now, is the dollar going to go away? I think that is a possibility. I think ultimately it's kind of unlikely because of how influential and how widespread the use of the dollar is. But is the dollar going to be debased significantly? Yeah, I think that's not only likely, but I think that is inevitable. Just look at the unfunded liabilities of the federal government, hundreds of trillions of dollars. Look at their track record over the past 20 years. What happens when a financial crisis looms its head? When it rears its head, when the financial crisis is looming, they turn to the printing presses. That is the solution. And we're beginning to see the consequences of that in the precious metals markets. There's a reason that gold is trading at almost $4,000. And I suspect we're going to see $4,000 gold by year end, just like we're going to see $50 silver. I mean, this is not even a out of the realm of possibilities forecast. This is not an extreme forecast. I mean, we're at 38, 33 in gold. To say it's going to go to 4,000 is a no-brainer, I think. Same thing with silver at $46. I mean, the past two incidents of a major bull market in the precious metals in dollars that were worth a lot more than they're worth today, the silver price rose to $50. Do you think it's going to stall now at 47 or 48? That's it? Not likely, given the backdrop against which this is occurring. And again, this is going to look like a small move. These dips should be purchased. That's my view. I'm not telling anybody what to do. I certainly don't take this as financial advice. Everybody's situation is different. Sure, there's people out there who, shouldn't be buying precious metals. But from my view, if you are a stacker and you're interested in this stuff and you've been waiting for a pullback, as many of us have, this is probably about as good as it's going to get. But let me know what you think in the comments down below. I do appreciate everybody who tunes into these live streams. Don't forget to head over to x.com/stacksmarter. Give me a follow over there. Shoot me a message. Say hi. And share this video with your friends and with your family, people you care about, because we're all in this economy together, and the vast majority of people are going to be relying on fiat currency as their store of value, and that's going to be a sad story that doesn't end well, if you ask me. So again, let me know what you think in the comments down below. Thanks for watching, everybody. Stay safe.